Imagine a world where money doesn't just grow, it multiplies quietly behind closed doors, in rooms most people will never enter. The ultra-rich play a different game, with rules you're never taught in school and deals you'll never hear about on the evening news. But today, that changes. I'm pulling back the curtain on 15 hidden investments the wealthy use to protect, grow, and multiply their fortunes. These aren't your everyday savings accounts or index funds. These are high-leverage, high-opportunity plays that can change the way you think about wealth forever. We'll count them down one by one, so you know exactly where you are, why each matters, and how they fit into the billionaire playbook. Stick with me until the end, because the final investment tip might be the most unexpected of them all. Welcome to Wealth Pal, a place where future exceptionally successful and wealthy individuals gain an unfair advantage. If you haven't yet, hit that subscribe button and turn on notifications so as to never miss out on a future life-changing video. Without further ado, here are 15 hidden investments the ultra-rich won't tell you. Number 1. Private equity and venture capital pre-IPO deals. Most people only get to invest in a company when it hits the stock market. By then, the biggest jumps in value have already happened. The ultra-rich? They get in years earlier, buying shares for pennies compared to what you'd see on Wall Street. Imagine putting $25,000 into a young company like Uber before it went public, turning it into millions when the IPO hit. These late-stage deals can deliver returns north of 20% a year, compared to the market's average 8 to 10%. But here's the catch. It's risky, illiquid, and you need access to insider networks. Miss the timing, and you could lose it all. Number 2. Offshore trusts and foundations. Wealth isn't only about making money, it's about keeping it. While most families keep their savings in a local bank, the ultra-rich move assets into places with friendlier tax laws and stronger privacy. Think Cayman Islands trusts or Liechtenstein family foundations. Legal structures that can shrink estate taxes by 30% or more. For the wealthy, this means their fortune grows faster and stays protected from lawsuits or political risks. Done right, these setups are completely lawful, but they require expert guidance to avoid costly mistakes. Done wrong, and you invite serious trouble. The point is simple. Location and structure can be just as important as the money itself. Number 3. Art, rare collectibles, and cultural assets. To most people, a Picasso is just a painting. To the ultra-rich, it's a financial fortress. They don't buy art for decoration. They buy it because it can rise in value while the stock market swings wildly. A Basquiat bought for a few million might sell years later for over $100 million. The same goes for rare watches, vintage cars, or historical manuscripts. These cultural assets carry prestige, diversify a portfolio, and often act as an inflation shield. But the hidden advantage? They can be moved, stored privately, and even borrowed against. Of course, markets for these treasures are niche, and knowing the right buyers is everything. Number 4. Agricultural and timberland investments. Some assets fade with fashion. Farmland and forests, they grow more valuable with every harvest and every tree ring. While the average investor chases the next big tech stock, billionaires quietly buy the land under our feet. Bill Gates, for example, is one of the largest farmland owners in the U.S. Why? Because farmland has delivered around 11 to 12% annual return for decades, often with lower ups and downs than the stock market. These assets produce income, hold value during inflation, and offer long-term stability. The drawback? You need patience and deep pockets to own and maintain them. For the wealthy, that patience pays in generations, not just years. Number 5. Private credit and debt financing. Why lend your money to a bank for tiny interest when you could be the bank? That's exactly what the ultra-rich do. Instead of parking millions in low-yield accounts, they lend directly to businesses, often mid-sized companies hungry for growth, but overlooked by big banks. These private loans can pay 8 to 12% a year, with agreements structured to protect the lender. The beauty? Steady cash flow and more control over the terms. The risk? If the borrower fails, you could take a hit, though deals are often backed by assets. For the wealthy, it's about replacing passive savings with income-generating power plays. Number 6. Special Purpose Vehicles, SPVs. Sometimes the most powerful moves aren't made alone. Special Purpose Vehicles, or SPVs, are like investment clubs for the elite, but with far more muscle. Picture a handful of wealthy players pooling their money into a single legal entity, created for one mission: to grab a stake in a hot, time-sensitive opportunity. That could be a pre-IPO tech giant, a prime real estate deal, or a rare asset auction. By combining resources, they gain entry to investments too large for one person alone, while sharing risk. The catch? You need to be invited in, and those invites rarely make their way beyond tight, powerful circles. Number 7. Luxury real estate via holding companies. That Malibu mansion with glass walls and ocean views? Chances are it's not owned by the person living there. It's owned by a holding company. For the ultra-rich, this isn't just about showing off. Buying property through a corporate shell protects privacy, keeps names off public records, and can unlock tax benefits. It also shields assets from lawsuits or creditors. These structures can even make it easier to transfer ownership without triggering costly taxes. The flip side? Setting it up requires legal expertise and ongoing costs. But for billionaires, that's a small price to keep both their address and their wealth off the radar. Number 8. Intellectual property, IP, rights. The ultra-rich know that owning ideas can be just as powerful as owning land or gold. Intellectual property, things like song catalogs, patents, software code, or trademarks, can earn money long after the work is done. Every time a song is streamed, a gadget is sold, or a brand logo is licensed, the owner gets paid. It's steady, often passive income that can last for decades. Big artists have sold music rights for hundreds of millions, and tech patents can bring in millions a year through licensing deals. The catch? Valuing intellectual property is tricky, and protecting it legally takes vigilance. But for the wealthy, it's a gold mine that keeps paying. Number 9. Strategic leverage on assets. Here's a counterintuitive truth. The wealthy often borrow, not because they're short on cash, but because it makes them richer. This is called strategic leverage. Instead of selling an asset like real estate or stock to free up money, they use it as collateral to borrow at low interest rates. They then invest that borrowed money into opportunities with higher returns, keeping their original asset intact and working for them. Done right, this can supercharge growth without triggering taxes from sale. But leverage is a double-edged sword. In a downturn, debts remain while asset values can drop. For the ultra-rich, timing and discipline are everything. Number 10. Early access to emerging markets. By the time you read about a booming market in the news, the ultra-rich have often been there for years, quietly planting their flags. Emerging markets are countries or sectors just beginning rapid growth, like parts of Southeast Asia, Africa, or frontier industries, such as renewable energy hubs. Early entry means buying assets or businesses before global demand explodes, locking in massive gains as economies mature. The wealthy use private networks to spot these plays early, sometimes through diplomatic ties or multinational partners. But these opportunities come with political, legal, and currency risks. For billionaires, the gamble is worth it because they're betting on tomorrow's gold rush today. Number 11. Private infrastructure projects. Toll roads, bridges, ports, they might sound boring, but to the ultra-rich, they're money machines that run for decades. Instead of just investing in companies, they fund the structures the world depends on. Imagine collecting a slice of every toll paid on a busy highway or rent from shipping containers passing through a private port. These projects often come with government-backed contracts, meaning predictable, long-term income. The wealthy love them because once built, they can produce steady cash with low competition. The challenge? Massive entry costs and complex legal agreements. For billionaires, That's just the price of owning a piece of the world's backbone. Number 12, carbon credits and environmental assets. For the ultra-rich, going green isn't just about saving the planet. It's also about making money while doing it. Carbon credits let companies offset their emissions by funding projects that reduce greenhouse gases, like reforestation or renewable energy farms. Investors who buy these credits early can sell them later as demand and prices rise, especially as governments tighten environmental rules. Beyond carbon, there are other green assets: water rights, renewable energy infrastructure, and sustainable farmland. The win-win? They earn income and improve their public image at the same time. The risk lies in shifting regulations and market volatility, but the potential upside is as fresh as clean air. Number 13, litigation finance. Here's a profit path most people never imagine: funding lawsuits. Litigation finance is when investors pay the legal costs for a case in exchange for a share of the payout if it wins. The ultra-rich back cases with big potential, like corporate disputes or patent battles worth millions. If the case succeeds, returns can be massive, often in the double digits, and completely uncorrelated with the stock market. The appeal? Even during market crashes, lawsuits can still pay out. The risk? If the case is lost, the investment goes to zero. For billionaires, it's just another way to turn capital into opportunity, betting on justice with a profit motive. Number 14, insider access to information and deal flow. It's not just what you know, it's who tells you first. The ultra-rich thrive on information arbitrage, learning about opportunities long before they reach the public. This might mean an early whisper about a regulatory change, a startup about to explode, or a property deal that hasn't hit the open market. These tips don't come from browsing headlines. They come from private dinners, closed-door conferences, and decades-built networks. Acting early means getting prime assets at bargain prices or securing positions before competition arrives. But here's the reality. Unless you're in those circles, you're often several steps behind. For billionaires, access itself is the ultimate investment. Number 15, shadow co-investments through family offices. Family offices are like the command centers of ultra-wealthy families, quietly managing fortunes worth hundreds of millions or even billions. One of their stealthiest moves is the shadow co-investment. Here's how it works. When a billionaire makes a major private investment, their family office may invite a few trusted allies to invest alongside them, often under identical terms. These opportunities aren't advertised, and the vetting is essentially already done by top-tier advisors. The appeal is clear. You ride the wave of billion-dollar deal-making without having to find the deal yourself. The downside? If you're not already in their trusted inner circle, you'll never even know it happened. If you stayed with me through all 15 plays, you're already thinking like the top 1%. These strategies aren't about luck. They're about access, timing, and the courage to move where most people don't even know a game is being played. The ultra-rich use these investments to protect what they have, multiply it quietly, and keep it far from public eyes. Now here's the thing. Even if you can't tap into all of them yet, just knowing they exist changes how you see money. It's not only about working harder, it's about working in the right arenas. I'll leave you with a challenge. Which of these shocked you the most? And which would you want to learn more about? Drop the word hidden in the comments so I know you're part of this Insiders Club. If you found this video insightful, like, subscribe, turn on notifications, and share it with someone who you know would find it interesting. Until next time, thanks for watching and see you in the next video.